Yes, so hopefully everyone can so here we're gonna go about understanding the price or how it works, or what are the things, the tools that you need to understand price, right? Nothing will just about whatever. Understand how the algorithm is and how the market makers move the market and how we can follow the footprints so we can catch the move, right? So first thing is how the market moves, right? What are the what we are getting into. So first we look into market structure. Because all we thought is Newton thought is not the market moves, right? First we go about the structure. Not the market structure. We will look well into the equity or and then we will look into time, which is the most important concept, and using order blocks. 5 again we have entries. 6 will be SMT or not, but it is important for you to know about SMT, alright? So this is a small one, but you have to have a prerequisite knowledge by your uh, maybe a little bit about SMC or anything, not directly the usual mediocre support in my system, though, right? Um, into the right, yeah. So let's start off here. So so many years or every book tells us that the market is like this, right? No. Um, if, for example, I'll just give you an example, right? So if this is how the market moves every single time, right? Then everyone would be able taking trades your and again if this breaks here, it's fine. They will take a loss. Then comes your takes left, takes left, takes that, takes. And everyone will be in profit, and who will be the one that will be taking a loss because our trading is a zero sum game, right? So for every buyer, there has to be a seller, right? So this doesn't work this way, and there wouldn't be any liquidity for anyone to sell their orders out here, right? So I'll show you the way how exactly the market moves and how we can go about catching those moves or looking into the finger or footprint of the market makers and the institutional, right? So market moves this, right? This why people buy, people buying your get wrecked, right? And yeah, people expecting that looking at this market structure shift, they would take this trade here, get wrecked. So again, next again, take the trade here, get wrecked again. And do you see what are the similarities in these? As soon as the orders are being taken by swing low or inducement or the liquidity is taken, the market rapidly pushes high, the price pushes high immediately as soon as it takes out the um, liquidity present there, inducing the buyer itself, inducing the buyers thinking that they want to buy here, and then they take out the stop loss, come to an area where they have the audience, move up. Alright, so that is how they get move. Alright, so I'll explain you with an example too, but let's look into how it works. Alright, this is how it is. This is how the market works, not the mediocrity of um, this. Instead, just keep in mind so that we don't see mediocre. Next, now to tell you why that is, for example, think you are a market maker. All right, so um, the prices are going lower. All right, so everyone is selling at this area at this peak. So you, as a market maker, you know that the market has to go to the certain area. There's a lot of liquidity here, and with the funds that you have, all right. So what we do is, as it goes up here, we sell. Goes up here, sell. Goes up here, I sell. Keep selling. So there will be an area. This is a resistance for people. Alright. Let's make it properly for resistance itself. Resistance. Alright. They think that okay, there's resistance here. They take the entry over here. Alright. Or expecting it to go lower. But me being the market maker, as I'm already selling from this area, every time you buy, you keep selling. When it takes the orders from here, right, and this breaks here, the buyers, there'll be buy stop up here, breakout traders, they take the trades over here, thinking that it's gonna go up, and the resistant traders or the normal SNR trader, they will be taking here a set, alright. So what I do is, or the market maker in this case, we push the prices higher, take the liquidity of this high. It may be in the form of highs or session or liquidity as in a previous day high, alright, previous day high, or session highs, alright. So it can be any ADs or just a normal 3 swing point. I'll show you what does 3 swing point do, right? And then as I'm selling here, I sell it from this area, correct all these orders which I have, the buy stops, the sellers limit, right, the buy stops, so when it goes up they get wrecked, the sellers here they're already being got wrecked here, right, then they don't have clue of what is going to happen, and then I push it down because if there are no orders, then the orders doesn't get filled. For you, or the market makers, for the orders to get filled, they need to keep selling beforehand. Or for example, if they need to buy, right? So, if they want to buy, they keep buying from this every swing point would be a buy, right? And then your company, so keep buy, they keep buying, they keep buying, this push here was given by them, right? Because the push was given by them in order, because they've been buying from here, and this is an area where people uh, get away from the normal resistance during the threat, and people who think that they're going down get back. Right? This area has a lot of liquidity, and then we push higher. Right? So this is just an example of how we look into the inducement or the buy side or the sell side liquidity, and how the market is, or the price moves, and how the market makers of the algorithm uh, makes way for them. Right? Because it has to be balanced, because for every buyer there has to be seller, right? So remember that it's a zero sum game. So they will make sure that they collect liquidity in any case, so that their order gets filled, right? So I'll just show you a few examples on this inducement or the structure and shift, right? So you know that this is how it moves. Just a moment, I'll just show you a few examples. Here again, here, alright. I'll show you a trend. Okay, yeah, here it is. Okay, so we know it's going in an uptrend, alright. Okay, let's focus on this leg. This leg, alright. So here is an area where a lot of people will be buying, right? Okay, this is 10 line break also. But a lot of people will be buying here, and there'll be a lot of people. Trend line breakout. One touch, two touch. What about how it works? Yeah, one touch, two touch, and third touch, when it breaks, they will sell here, right? Right? They will sell here. So we have a liquidity in the form of trend line. Now, expecting for them to break it first, and then buyers are waiting to buy after it gives a sell stop, and they get wrecked, and the sellers will look into them forward, and here is the liquidity that they have to take it up, because this is a swing low in an internal, this is called as inducement to, this is called inducement on the buy side or sell side liquidity. This is now the sell side liquidity, selling side. So here the people who have bought from here are going to get wrecked, and this is the SMR traders selling here. Now they actually know from them would be this last down push before the move, but it all happens at key time as this. Okay, I will show you how to click this also, but right now let's just take this right, and this 5 last push down 5 push down, and swept liquidity, or like this is what we're aiming for. When we go into the lower time frame, we will get an entry level. So we have the liquidity. This liquidity is still left. After this, we have the sector, and we have the traders who understand how this works. Take the trades from this area. This is also a good area, but we'll be mindful of it. But showing how it works. This is an order block. Uh, confirmation for us to buy up. I'm not gonna blindly take that off, alright? So we have the liquidity from here, the liquidity from here. So we have a lot of liquidity and the market makers have found liquidity here because they buy here, buy here, buy here, buy here, and when they get the momentum from here, it goes. See, you can see the impact here, right? See that push, the momentum push, right? That is how it works. Just example here. Let me see if there's any other example I can find. Yeah, sure, it's this. Pass down, push, push down, and then went up, right? And we are bullish. You can see, still bullish, bullish. Then in the spec, I'll tell you how to identify the legs also. The dealing range. We come back, take the trade here. All right, we break the structure, market structure shift, and people go long here in this area. Normally, you want to go long here because it broke the structure here, right? So it's structure. So then the SNR traders come into play. Every traders get trapped here because there isn't any inducement in this level. So really, so easy to get no inducement. So we cannot then we can do take in this area. Then this becomes the liquidity for the market makers. It may take some time, but yeah, this becomes the liquidity. Right? So we look at the footprint and then we take this trade B as our because it's a liquidity here, and this was the initial one. This is the breakup. So we did this trade here. We don't expect this to be taken, but we react to particular days out of it. Not every time will be the same, right? It comes back. So this will be a high probability trade for us, thinking that expecting that they'll take on liquidity and pushing here. They come back down again, right, by tapping this area here, which has the inducement and the sellers here. Come back down, and as we looked at before, we come back to the extreme end of this range, alright, and then we could find any proof from them. It's this loss candle, but yeah, they don't happen at the entry, but you see the push that they're given. This is a footprint of uh, the market makers. They come to this area, they've taken the liquidity of these lows here, a lot of liquidity here, they built liquidity, swept liquidity, going up again. So the market only does two things, either seeks liquidity and rebalances the liquidity. Seeks liquidity, took the liquidity, rebalances liquidity, okay. Seeks liquidity, rebalances the liquidity. Seeks liquidity, rebalances liquidity. And there's another example here though. Again, we're still in uptrend, right? So it will be better when in uptrend if you find any inducement like this. This is an inducement, alright. Um, so this is an inducement, and the inducement or the sell side or buy side will usually be denoted by the three swing points, or if the previous candle has been swept by the previous candle, this candle is swept by the previous candle. So inducement is when this candle will be swept by the previous candle and breaks above. This becomes an inducement. Why? Because there was a participation of the buyers and sellers and push up, push down, right? So we would take this as inducement, right? So mm, yeah, we are also the reason that I have supposed example again, one, one, two. The third candle sub, the second candle low, broke above. So this becomes inducement, alright? So I'll show you now this. Okay, this think of it as so this kind of sweeps and breaks this side. So this camel sweeps for a second. The second candle is swept by third candle because this becomes a swing now, because there was active participation of liquidity swept here. They pushed prices higher. So we'll be taking this as a same thing. So it may be different types. So this is a type, and the next type will be this, and this. Okay. If this it doesn't matter when it sweeps, it has to break with the body. So again, now again here, one, two, third candle is swept by the second candle. Second candle is swept by third candle, and then the fourth candle is being made. But when you can do it, it's swept about, broke with the structure, momentum, right? And then they come back up to hunt that liquidity that is there's the liquidity that is present here, right? And then move the prices higher. Simple as it gets, alright. So this is just um, example of a market structure and how it works. Let me just show you. I'll just show you from here. This is important per se. Let's mark out the market structure and explain it. Let's just make this red. Okay, good. First make a structure, right? So we are not dealing with need for premium and discount. I guess you guys know it, right? And this becomes your inducement. One, two, second candle step by third candle, and we'll be seeing about we'll be seeing about the entries of what kind of criteria why we did this and this, because it all becomes in the higher time frame, because multi-time frame is important. But I've explained structure and the 4 hours, right? Most of the time 4 hours is important. for intraday trading. So here there isn't any. Here you see that. Okay, and you be a bit skeptical here. Wait for a clear sign and then you get alright. Next again, here this means this daily range. Let's take this out. So here there's inducement. This is your paper structure or market structure shift. And this is your buy side liquidity. This is your sell side liquidity and inducement, right? Next again, this is our next break of the market structure shift. This is our low. We can't take this as the high. We only can take the range high when the inducement is being taken. Alright. So here we wait if there's an inducement taken. Here these are all the continuation of the same. Look into it, and these all come into my things here. Alright. So we are bullish. Boom. Boom. Okay. Move up and back up. These are all entries you can find. This is another entry. I'll show you everything one by one, but let's just focus on the structure mapping first. Alright. So now we wait. So we expect this again. We're expecting breaks the structure, and when it breaks, sweeps this, it can be confirmed that this will be higher high. Okay, this became the higher high. Here we look for any areas of verification, and this is already been mitigated. This is the area we'll be looking for. Once this area started and it couldn't, next area will be this. Right. Again, next. That's done. Then this is the paper structure, and next will be this. And this will be the dealing range. Again, next you can see that it will make sure that it is pinpointly accurate to the PDOAs and 50%, right? Again, next, the structure. Wait for the inducement to be taken off, which it did here. Let's put here, and we don't have any PDOAs apart from this. And here we are. That we didn't get any of our order block or PDOAs that formed higher. There is nothing here in case in fact there is a PDOA, a bearish PDOA support in this area. Right. Next, expect here. See, actually give there an entry. That's not candle. Okay. Yeah, maybe if you got here, you would have been red, but no worries. Next, we will take this area and we'll use that to our advantage. Became a bearish PDOA and back up. So now this is a break of or a change in the trend. Now it swept took liquidity here, swept that again. This is confirmed trend. Then next again. It is to be confirmed, there has to be some swept that down. The guy, because there is this inducement. that, right? And next, the highest point would be this right here, and the date would be this. So we're not gonna mark this out as the low. Wait, no. Okay, this here strips this the first order block within 10, right? So now this becomes a low. So next again, come back up here. This is the break of the structure. Next again, this is the high, low, few high and low, and here there's no inducement yet, and breaks the structure. So we may validate that this is a change in trend because it had inducement here, broke the structure. So again here, I see this, I see this as a range, but until it gives us inducement, we don't take that, right? There's no inducement here yet. We don't indulge in it yet. Um, it's not up here. Maybe you could have taken a trade here. That's for the session, and again, last stop, yeah. Come back down. So last stop can what? So I wait. Oh, what's gonna happen? Mhm. So in case that this is a change in market structure also, we want this area to be swept, right? Okay. Swept, swept here, but this is the real one. So this should be swept for us, but it is not. Now, uh, change to back to the same trend. Came down, swept. So this has inducement, but it never had a wave of structure yet. So we just take this if in case we get any areas of buying and selling. This becomes the internal area, right? So let's see how it. You can know about whether if it goes up or if it is bullish or bearish with the higher time frame period wave. For example, the weekly or the daily. I'll show you how it works. Next, you can deal within this range in here with the flip, right? And you see that it broke the structure over here, right? Um, the inducement, double structure, all right, and this becomes the first one. Now, the first inducement will be this, so this becomes the higher high, and expecting it to come to the this area here, this area right here, and as you can see, it can pinpoint this majorly uh, last order block because it should come here, the first order block. In when there's inducement, it has to take the support from here and move higher. If it doesn't, in case, and most of the time it comes back to the extreme order block to take the orders because all these becomes liquidity. All right, as you can see, it pinpoint accurately came back to this area, went up again, and broke the structure, right? So this doesn't break the structure. Sweeps, not even sweeps, extreme inducement takes it, moves down. Alright, um, again, so this becomes the inducement, that is the trap of Sellers, right? And as I told you before, it either comes to the nearest order block or to the extreme order block. Came to the nearest order block. Cipher, right? With the FAB here, you can see this will have a higher time frame FAB or order block above or some liquidity, right? But this is a high liquidity taken. So now we confirm that it's sitting in the down. This is the first liquidity. Took out the liquidity. This is our last up move. Pin contact it and down below. Again, there is no engagement, so we expect this to be taken out. And it took out completely. So we take this as break off or character. This, let's see if in case it breaks it, then I'm going to see it. Okay, yeah. This is an inducement. This is an inducement type of seller. The first order block that we find. Push with this, push higher, came back here. Up here, tapped into the higher time frame. This is a higher time frame, like inside higher time frame, like we are dealing with the 4-hour structure, maybe in weekly. Okay. Comes back up here, goes down here. And so this is how it is. Right. We'll look into it a lot, but this is the examples I could give to you guys. Hopefully you understand what inducement is, right? Next, we will go to the PTOAs or the order blocks and see how we could frame an order flow using the PTOAs. That is, yeah, PTOAs which supports the price or which pushes the price towards the order flow, right? Yeah, that's it. Trading